Hello, everyone. Good evening, and welcome to this weekend's market analysis. In this video, I'm going to be taking you through my thought process in the gold market and what I expect to see based on both fundamental events and the structures I have identified on the chart. Now, what you see on your screen right now is the 4 hours time frame of the XAUUSD market, which gives us the character of price action since the beginning of September. And so we are talking about 3 months of historical data here. Now, the first thing you would observe is the fact that the momentum has been very bullish, and after connecting the series of higher lows here, we have a beautiful ascending trend line to work with. And you know how we use our ascending trend lines. As long as price remains above them, we continue to look out for patterns and structures that support buying ideas, right? And unless the ascending trend line is breached and broken to the downside, can we start considering selling? And as it is right now, price still remains above the ascending trend line. Now, let's zoom into structure. Let's see what happened last week. So as you can see, gold experienced what I would call a choppy market condition as indecision prevailed throughout the week. Look at here, price started last week somewhere around the 4,100 area, and then it dropped about a 1% down into the $4,000 area. The market actually got cautious because the Federal Reserve might not cut rates soon and the US dollar strengthened at the same time. And you know, when the Fed holds off on easing, gold becomes less appealing, and a stronger dollar makes it more expensive for people holding other currencies. So that early week drop made perfect sense. Even with that dip, the bigger picture for gold is still supportive, right? Inflation worries, geopolitical tensions, safe haven demand, and expectations of future policy easing kept the trend bullish. In fact, analysts also pointed out that gold had been overbought in the short term, so a pullback was expected. But the overall trend still remains to the upside. That's why gold stayed above the ascending trend line that has been holding the momentum since September. And this was further evident as we saw as soon as price tested the $4,000 level, which interestingly shares a confluence with the ascending trend line, we saw buy pressure resume. The dip created a classic buying on dips opportunity. Traders saw the weakness as temporary and not a reversal, and many viewed the $4,000 region as a solid support. So through the week, gold moved up and down through that area, and as the market balanced mixed signals, stronger US dollar, hawkish Fed comments, and no major new catalyst kept traders cautious. Now, all of this fits a consolidation phase within a broader uptrend. As we can see, price was more or less trapped between the 4,130 and the $4,000 area to emphasize the prevailing uncertainty in the market. So in simple terms, the market was just catching its breath, balancing long-term bullish drivers with short-term uncertainty. Now, going into next week, I'm going to be keeping a close eye on Tuesday's trading session when the US Producer Price Index for September will be released. This numbers matters because it shows how much producers are charging and gives an early signal on inflation. Shortly after, we have the retail sales data for September. And this data here will be showing us how strong consumer spending has been. Together, these numbers give a good sense of where the US economy is heading and how gold might react. Right now, looking at the structure, gold is currently holding above the ascending trend line, right? And at the same time, it's within a consolidation, just sitting right above the trend line, not moving sharply up or down, just finding its balance at that sweet spot. Now, here is how I'm thinking about it. If the PPI comes in higher than expected, showing stronger inflation pressure, I expect the US dollar to rise and gold to feel some pressure. And in that case, we may likely see price break down both the ascending trend line, the $4,000, 4,040 zone, where continuous selling pressure below the structure hold inside selling opportunities, right? But if the PPI is weaker than expected, meaning inflation looks under control, I expect to see easing pressure on the dollar and of course rate cut expectation. And then gold could then hold above the $4,040 zone where continued buy pressure above the structure will give me every good reason to maintain my bullish bias. Now, the retail sales number will also play a significant role. If consumer spending comes in strong, it could push growth and inflation fears higher, which will pressure gold, of course. If spending is weak, gold could get some relief. Since we are in a consolidation, I'm not expecting a big breakout unless one of these numbers really surprises. Because the trend line is still very much intact. I feel gold has a better chance of a mid-range bounce from this area than a full collapse from that point. Still, I'm cautious. There is no guarantee of a sharp move upward unless something triggers it out of this consolidation phase we have here. So that is my take on the gold and what I'm watching for the coming week. I will be closely monitoring how price reacts to this economic event, and I will be sharing updates in the comment section as I continue to monitor price action. So I encourage us all to make sure check back if you want to see how things will unfold. So until we meet again, I am trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.